Hello, I hope you're doing fine. I hope you're doing wonderful. I hope you're disco. And this is both a market brief and gold brief. Unfortunately, the bear scenario is still intact, and I think we need a tremendous energy to change the trend. And hopefully, the job data on Friday might do that. It's very possible, like what happened during the Jackson Hole meeting, it changed everything. Maybe the job data will change everything as well. So we'll keep our fingers crossed. So this is the VIX for the S&P, and it's still in a breakout mode. This is the inverted head and shoulder in a breakout mode. Most likely might go to 31 as a full measured move, and the indicators are still in disco combo and nothing uplifting about that one. We might be even forming a bull flag in the daily time frame. So yeah, the VIX is still telling us that we might be in trouble. Good deal. And this is the VIX in a weekly time frame, and a disco combo also is intact, and it's not looking good. All right. So now I'll be talking about the equity put to call in the daily time frame. This is from yesterday. My daily equity put to call is not updated yet. Maybe in 6 hours, but I don't have 6 hours. I have to do it now. From yesterday, it's still in a bullish mode. The disco combo with extremely high reading for the stochastic. Okay, and the price action now, the ratio is at 80. So more people now up there. So this thing assumes trend continues for the short term, and we might have more bearishness to come in the daily time frame for the equity put to call. This is the weekly put to call, and the disco combo is intact, and every time this combo gets into a disco combo in a bullish mode, something bleeding takes place in the stock market. Okay, so no one knows the future, but this is always not a good sign. All right, so this is the weekly time frame for the equity protocol. This is my disco signal. Also, this is from yesterday. My new one is not updated yet, and it's almost there. Yeah. Now the 20-day moving average for the equity protocol, now it's going up so rapidly now to 60.62, and the 50-day moving average for the equity protocol is 63, and we don't know when the bullish crossover will take place. A bullish crossover in the equity protocol means sell off in the market. It does not mean a meltdown, it means a sell off, a sizable one. And this is, I tested this in the past, at least 90 to 92% success rate. But remember, this did not take place yet, but it's getting closer. Okay, this is the UUB, the ETF for the dollar, and this beast is refusing to back off. And still, although this is a bunch of bearish candles, at least for the last 3 working days, yet the bullish disco combo is still intact, and it is bringing a lot of dipper buyers. And once we break out of this high, which is 29.20, which is extremely close, unfortunately, a havoc might take place, and we go through a breakout mode and measure moves. Okay, so that's the UUP, the ETF for the dollar, and this is the Dow Industrial. And we are in breakdown mode, and we closed at the low of today, and this is not good. That's why I don't like shorting, because usually the price action stops at a demand area. So it would not be very wise to short today if the price action is at demand zone. It really defies logic. And this is how what I'm talking about right now. So we are absolutely now at 62% Fibonacci retracement from this low to the recent high. So why would you short? It's not very bright. Okay, good deal. We are definitely in demand area. The breakdown mode, the breakout mode, the breakdown mode for the Dow Industrial will stop at the full measure move. Nobody knows the future, but it could go all the way to 30,500. So this breakdown full measure move is right here. So if we continue to go down, we're gonna test different price memory, but this is a very, very strong one, and no one knows the future, and the volume is decent too. So the real selling is going on right now in the equity market. Okay, this is GLD, the ETF for gold, and as I stated before, usually when the stochastic is below 20 in an embedded state, usually people will sell rallies, and that's what happened. When it was almost in the green today, yet people sold it. So if you look at this individually, this is an inverted hammer, which is very bullish candle yet. I don't like to take them seriously while the stochastic is this week. Usually continuation takes place or people sell the rallies. So nothing good for gold except this demand zone. And even if we find buyers here, people will sell the rallies. And it's good to start the bottoming process. So there's nothing wrong with the bottoming process. But usually people would sell rallies like here when it was below 20C. So it was June 29th. It was below 20. So people start selling every rally until it hit the bottom. And a miracle happened after that. We got out of the oversold for the stochastic, and a good thing happened. And now we're not only in a bearish disco combo, but in a very weak state when it comes to the stochastic. So people usually typically sell rallies. SLV for the ETF for silver, and it's definitely indefinite breakdown mode. We made a yearly low now. It's lower than July 14th, unfortunately, with very, very deep oversold in stochastic with embedded state, which means people would sell rallies as well, like what they did to this mini thing, and it went down and closed at the low. If you notice, we had this state in the 19th of August, and after that, people start selling the rally. So nothing really pretty about silver. Good deal. So let's look at GDX. GDX also in a breakdown mode, and usually GDX, when they consolidate in a form of a bottoming process, and if you break down, usually you go to 162 Fibonacci extension from the low of July 25th to the high of August 10th. This will give us about 2232. Unfortunately, this took place many times in the past, like the consolidation that took place in September 2021, and we found buyers at that low, which was 28.90 something or 80 something, I really forgot, and that low held for many times. And we could look at the previous low or previous breakdown that took place in the consolidation between 12th of May until 16th of June. Let's see, where did it find buyers? It was It was 227. So it's not even 162. It really went down. Yeah, it was really severe back then. Severe. You can argue, oh, yeah, yeah, it was not. So we brace for the best now. We don't know. Where would we find buyers in this recent breakdown? It's all up to the dollar right now for sure. So look at this one from March 15th to April high. We found buyers at the full measure move, and boom. Somebody, yeah. So yeah, I'm sorry I don't have anything good to say for the market, but we're hoping that the job report will provide different momentum, and hopefully the market will bounce, and gold will bounce, and things will be better. Please like if you like, share, subscribe, and do remember, disco is forever.